Boom! What's going on, guys? Welcome into your Energy News Beat here on this gorgeous Thursday, February 11th, 2021. As always, I am your humble correspondent, Michael Dinner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. It's been a long one for us today, Stu. How you doing?
It's a beautiful day in the neighborhood, and had a beautiful show today with Jay Young as well as Ryan Ray. Outstanding webinar. We'll be having that in the show notes.
Yeah, in full disclosure, did not get a chance to watch that, so I'm excited to be able to sit down and watch the replay. We got stuff going on here, Stu. You can check out what we have on the show to my left. But before we do that, guys, just go ahead and subscribe to the world's greatest YouTube channel, Energy News Beat, the best place to stay up with all your energy finance stuff. If I was a millionaire on YouTube, I would say smash that like button, but I will refrain from saying that. Also, check us out on the world's greatest website, www.energynewsbeat.com. Go ahead and hit that notifications button in the bottom right corner. It's legit just an IV of news. We're about to be rolling out a new RSS feed. I was encouraged by some stuff I saw today, so please check us out on the world's greatest website, energynewsbeat.com. Top line equities today, interesting. SPY was up tenth of a percentage point. NASDAQ trades 0.6 of a percentage point. Dow Jones drops it a little bit. Why the choppy news? Earnings are rolling out. Looks like Disney just posted some great earnings. They've got 94.6 million subscribers on Disney Plus. Woo-hoo-hoo! The problem is we saw a worse than expected reading of the jobless claims. First time jobless claims for unemployment insurance totaled 793,000 last week, even amid declining COVID-19 cases. Economists like myself, polled by Dow Jones, expected a total of 760,000. And as we heard yesterday from Fed Chair Powell, that unemployment number is not 6 percentage points. It's likely around that 10 percentage points. So that's not going to do well in prices. We've seen a great bull run so far in February. These last 2 days pulled down. I expect to see the same thing tomorrow. Let's go ahead and roll over. I'd be remiss to say Bitcoin up 5% today. Good for all you Bitcoin traders. Crude oil on our backside, about 1.5% on the downside, currently trading 57.91. I mean, the bull run couldn't sustain itself that long. We needed to see a little bit of a pullback. If anything other than just it was a technical pullback. I wouldn't even say there's a fundamental reason for the fact that we pull back other than it's just that sometimes you have to just, like a fine wine, baby, you just got to let it breathe sometimes. Sometimes you just get too strung out. You just relax a little bit. So, expected drop today. Brent drops to 60.81. That's only down 0.9 of a percentage point. Back end of the WTI curve, 54.68. That's 1.5% on the downside. Natural gas, after being above $3, pull back 1.6 percentage points, currently trading at $2.68, or excuse me, $2.86. Back end of the natural gas curve, $3.02. That's 1.5% on the downside. XOP, biggest loser in our E&P or in our S&P securities. E&P securities dropped 1.8 percentage point total, down to 73.51. OIH, which oil field services, doesn't do much better, down 2.7 percentage points, currently trading 178.85. Let's go ahead and look at some of our stocks, starting on the downside. U.S. Energy Corp down 10 percentage point, Barnwell down 16, New Concept Energy down 20, Mexico down 20, and Tensico down 30 percentage point. On the upside, good numbers, guys. Extraction up 6 percentage points, Consol Energy up 9, Telranian and Midstream, they're up 11, and Ramaco Resources, $159 million small cap company, they're up 11.6 percentage point. Stu, internationally, what do you got for us today?
Oh, man. Holy smokes. What a great day. Hey, the IEA and not the EIA, the International Oil Market, says oil market recovery still is fragile as the virus persists. They say that rebalancing of the global oil markets remains fragile this year. And I would agree with that for just a little bit. On the other hand, oil demand is still going to be around. It says in the short term, market conditions face temporary setback. I agree. And with what we had been talking about with OPEC, maybe if their folks get in line, we might see some of that. Next on the block, we have India. India is going to be the next largest, and it says India set to be the largest increase in energy demand over the next 20 years. This is huge. If you're in solar, you're in wind, you're in any kind of energy, India is where you want to be selling as an emerging market. Part of this kind of an issue, though, is they're trying to balance out between the lowest cost kilowatt per hour, and it's going to be interesting to see how they handle that. So hats off to that and the IEA for being able to recognize this. The shout out for the CEO of the year goes out to our friend at Shell.
Mm-hmm.
This was an outstanding. They had Shell Consumer Day, or however you want to say it. It was very good. Ben Von Burden, hats off to him. We have it, Bloomberg video on our website embedded, so it is legal. Go watch it on the Energy News Beat. He says that CEO says they're not going to turn their back on their legacy business. He also steps it up one step further and says, we are going to be honorable to our shareholders on green. We are going to be an energy company, but he articulates it dead on. Shell CEO gets my vote for CEO of the year. I love it. Go watch his video.
Good. We're still on the lookout for IR Guy of the Week, so I have to put my hat on and figure out where we came out. But no, you could check out all of these stories, especially this Shell story, via the world's greatest website, EnergyNewsBeat.com. Anything else internationally today, Stu?
No, hey, want to give a shout out to the Jay Young team over at King Operating, as well as Ryan Ray. Outstanding webinar. I'll have those in the show notes. I happen to be on it. Anyway,
yeah,
it was a great show.
If you're not tired of us already, you can go watch an hour of Stu on another webinar. So that's what you're throwing on a first. That's what me and I'm going on a date tonight. That's what we're doing. I'm just kidding. About the date idea, I am going to turn.
Don't kill the
on
date.
Tonight.
You want them to date again. Don't show them that.
All right, guys, before we embarrass ourselves too much, let's go ahead and move over into the U.S. shale patch. Couple things, guys. Natural gas stocks only draw 171 billion cubic feet, which is, I think part of the reason why you're seeing a little bit of the breath on natural gas. We see it trading down $2.86. The problem is it's supposed to be a super cold February. It's actually freezing cold outside right now. It's going to be freezing all throughout this weekend, at least throughout the Midwest. Denver, I know Clark or Stu, you have some snow up in there in Oklahoma. We've definitely got some snow coming in on Saturday here in Denver. So it's going to be interesting. But that 171 billion cubic feet, a little lower than estimates, and I think it's partly why you saw natural gas take a little breath today. Duke Energy, we don't really talk much about utilities earnings, but I thought this was really interesting. Duke earnings come out with a quarterly earnings of $1.03 per share. That beats consensus of $1.02 per share. To give you guys an idea, this presents a 0.98% surprise in terms of revenues. $5.7 billion for the quarter ending 2020 in December. That compares to $6.10 billion. So to give you guys an idea, Duke Energy is one of the largest companies that has implemented what's called an electrical utility moratorium. If you can't pay your bill, you don't have to pay that. And because they service a lot of low income. So I was very interested to see what their earnings came out, because I wanted to know what big of a hit they took. Is some electrical company coming out and saying, hey, if you can't afford to pay your electrical, but you don't have to, and not really being a little unclear maybe about how you would go about turning it back. I mean, he only took only a $500 million hit, but you're still coming in at $5.7 billion in terms of revenue, and the fact that quarterly earnings beat on a per share basis. If there's never been utilities going to be around for a while. If you can own some utilities, good for you guys. It'll be very interesting when they start collecting all that unpaid moratoriums, or what's more likely, they just get a fat government check. That could work too.
As long as they're taking care of the people, I love it.
Exactly. Final story for the day, as you can see to my left there, Energy Transfer Partners has announced a specific top new renewables unit. Basically what this unit is going to do is investigate how to use wind, solar, and thermal projects in order to help transport and lower their carbon footprint. They also said in the release that they're going to see if they can convert some of their existing pipeline into maybe carrying things like hydrogen, which you've talked about. You saw this coming from a mile away about everybody else in the industry made this pivot. It was about time you saw somebody like Energy Transfer. Yeah, we'll see. We'll see. We will see. That's all I'll say about that one, Stu. What else we got for the show today? Anything else?
No, I am wiped out with the snow coming up in Oklahoma. It'd be easier to track them bears around here.
Yeah, no kidding. And with that, guys, we're going to let you get out of here, get back to work, finish every day. Thank you for checking us out here on the world's greatest energy news show, Energy News Beat. For Stuart Turley, I'm Michael Tanner. We'll see you guys tomorrow on the Energy Beat.